Hello and welcome to episode 14 of our tax update series. As always, this will be presented by our in-house chartered tax advisor, Andy Rainford, who I'm told will be celebrating yet another birthday next month.
Yes, thanks for the reminder, Millie, and hello to you all as well. As Millie said, I'm Andy Rainford, your host. I'm a chartered tax advisor and content writer at Tax Essentials for Advisors, and will be bringing you up to date with the latest news from the last 2 weeks. Following our usual format, this episode includes a reminder of a key payment deadline that has a rather special significance for yours truly, a plea from HMRC about postal correspondence, and a case involving the cancellation of a contract for a merger. So first up, the Welsh Government has published its draft budget for 2026 to 2027, and there are some noteworthy changes to land transaction tax. While the headline rates and thresholds aren't changing, there are 3 proposed amendments to be aware of. Firstly, an equalisation rule will be applied to multiple dwellings relief. It appears this will allow for an adjustment where there are properties that would be chargeable at both the main and higher rates included in the claim. There is no detail about how this will work, but it is reassuring that the Welsh Government hasn't scrapped the relief, as had been anticipated. A second change will increase the minimum tax rule rate from 1% to 3%. Lastly, there will be an extension to the higher rate refund rules. This will allow the buyer to reclaim the difference between the higher and main rates if the property is leased to a local authority under a special Welsh scheme. Next up is a warning about November's pay as you earn electronic payment deadline. This is on the 22nd of November, which falls on a Saturday. The key point is that automatic payments must be set so that cleared funds are received by HMRC on the 21st. If this can't be done, alternative methods such as faster pay should be considered. The 22nd will also be my 44th birthday, and I will be catching some rays in Fuerteventura, though the week of R&R has been somewhat spoiled by a certain someone setting an autumn budget in the middle of it. How very dare she? Speaking of HMRC, the department has said it is still receiving postal correspondence from bereaved persons to an out-of-date address. Bereavement services assist the relatives of people that have died with various tax matters, including refunds. The correct current address is shown here. The department is also stepping up its awareness campaign ahead of the rollout of making tax digital for income tax. From November, landlords and sole traders that fit the mandation profile will receive a letter informing them of what to do and how to prepare. It's important that the recipients understand that they will not be automatically registered, and that they will be responsible for doing so, either directly or through an authorised representative. This first case involved a company that had a contractual agreement for a merger with an American company. The American company subsequently received a better offer for its shares. As the British company was unable to match this, the merger never took place, and the American company paid a £97 million termination fee, which HMRC argued was a capital sum derived from an asset, as the company had surrendered rights. The company and the tribunal disagreed. The company hadn't surrendered anything, and the sum paid was in respect of the loss of rights, not their surrender or forfeiture. Finally, a company entered into a scheme with some of its employees whereby cash payments were made to individuals, on the understanding that the funds would be used to purchase a new class of shares. The shares were essentially worthless, but the idea appeared to be securing a corporation tax deduction. The circular nature of the funds is a classic hallmark of spurious tax avoidance schemes, and it's not surprising to see that the tribunal dismissed the argument against the payments being earnings. That wraps it up from me this week, but I'm going to pass you back to Millie, who has some information about our next webinar. I'll leave you in her capable hands, so until next time it's goodbye from me. Thanks for watching.
Just a quick reminder that our next webinar is on VAT in the construction industry. Our in-house tax specialists Andy and Rachel will be speaking to Neil Warren, leading VAT expert, about the practicalities of advising clients in this area. The webinar will be held at 1 p.m. on Thursday the 13th of November. You can secure your place by using the link shown here.